today's video, I'm going to show you how to shop for health insurance in 2026. Let's go.
All right, guys, so the first thing we need to do is to go to this website. Number one, bettercare.com. You will land on a page like this. You enter your zip code, first name, email address, and phone number. Right, and then you click on See Plans and Prices. All right, so today I just got a request from a lady who lives in Orlando, zip code 32811. She's looking for a plan for herself only. She is 38 years old and she's making around $50,000. She does not use tobacco. She's not pregnant. She's not planning to be pregnant. And she's not taking any medications. And we're going to be looking at her healthcare options, both in the marketplace, which is healthcare.gov, the marketplace exchange that is supported by the government or subsidized by the government, and the private option. And we're going to compare both. So here we go. So as I entered her information here, as you can see, she has estimated savings of $249 a month, which means this is her deductible. Not deductible. This is her tax credit, or what do you call the subsidy. So it means the same thing. So this is how much money she's going to be saving on any plan that she's going to choose. So let's look at her options in 2026. As you can see, she can shop from 206 plans, and the cheapest is going to be $239.87. So if you're a young lady around 38 and you're making more than $50,000, this is going to be more expensive for you, more than 239. But if you're making less than 50,000, then this is going to be cheaper than this one. So the cheapest plan, the lowest premium for this lady here, is going to start at $239. Now, why I would not recommend this plan for her is simply because of two numbers. So the first number is the deductible amount. So this is the amount that this lady has to meet or spend out of her pocket before she can get covered. Now, if she's healthy, she's not taking medication, chances are she's not going to meet this deductible, which means that it's like she does not have insurance, because every time she goes to the hospital or to the doctor, she is going to be paying out of her pocket. So why pay a monthly premium of $239 if the insurance is not going to help you if something happens? Now, I'm not gonna say that this plan, there's no use of this plan. No, there is a use of this plan, and the only use that I see for this plan is going to be in a, God forbid, a catastrophic event. So the only time that this plan will make any sense is that if this person gets all of a sudden a terminal illness, or she needs a major surgery, or she got involved in a very bad accident and she has to have multiple surgeries and she has broken bones and stuff like that. In that scenario, a hospital bill will be in the tens of thousands of dollars, if not hundreds of thousands of dollars. So in that moment, in this situation, $9,000 does not look bad at all as a deductible. And after she meets that deductible, let's suppose this is the scenario, not wishing any ill will to anybody, but if that is her situation, what's going to happen? She meets the $9,000 deductible, as you can see here on the screen, but she's not off the hook yet. Why? Because she needs to keep paying until her total spend for this year is going to be $10,000 and $600. And this is her co-insurance. So after she meets the deductible, look here. This is why I don't go with the cheapest plans, guys. Premium care visits, she will not even save money on that. So her doctor visits, her specialists, um, she has to pay full price until she meets 9,000, and then even then, she still has to pay 40% of whatever her bill is. So for that reason, yeah, really. So no charge for preventative care. Not really. It's not really that important because you could have a preventative care visit, an annual checkup for no more around maybe $300. So it's not like she's gonna be saving a lot here. So anyway, this is in brief why I would not pick up this plan for this lady. So I'm gonna go back, and as long as I am seeing a deductible up front this high, I'm not gonna stop. So I'm just gonna keep scrolling, and my ideal deductible will be something lower than 1,500. So since I've done this a couple of times, I'm just gonna go straight to the plans that I want to spend more time on. So we make this video a little bit short. So, but before we go there, I'm just going to show you one hidden cost in this plan. So say, well, Rashid, this is a good plan. Look at the deductible, zero. All right, good. So read this. This is only a health deductible. What does that mean? If you look here to your right, there is a separate deductible for medication up to $4,200. So if this person, even she's healthy right now and everything, but God forbid if something happens or she's diagnosed with something and she starts taking medication, she's going to be paying for all that medication from her pocket until she meets 4,200. So as long as I'm seeing deductible here or here, I'm just going to keep going. So let's go a little bit faster here. And if you guys would like me to make a customized video for your situation, for your stats, just let me know. Go to onebettercare.com/demo, enter some basic information, and I'll be more than happy to either do this live with you on the phone while you're looking at your screen, or I can create a short video and send it to you so that you know your options and I will give you my recommendations. Anyway, so let's move on. I know that I'm not seeing the plan yet that I would like to discuss with you here. And here is my first plan that I will spend a little bit more on. So $453 a month, and then $800 deductible to satisfy, which is not too high. And then let's look at details here. So after deductible, the good thing about this one, look at this. So it's a flat rate fee before or after deductible. So she's not going to be paying more than $35 for her primary visit and $55 for her specialist, right? So not too bad there. Her medication is covered a little bit, but not really. I'm not liking this 50% co-insurance on medication, although it's not too bad, but still this is a little bit high for me. So let's look at other stuff. So let's say x-rays, imaging, any visit to the hospital, emergency room. As you can see, full price, but after that is 35%, which is not too bad for the cost of this premium. Not too bad at all. I prefer 20% co-insurance or 30% co-insurance. So I'm gonna scroll back out to this, and then let's go and look at if we can spot any better plan with co-insurance. So far we're looking at, sorry, this is too high. We're looking at a premium of 453, and let's see if we can spot a better plan here. Sorry, I'm just scrolling so fast here. So we keep this video short and sweet. Okay. All right. So page number 8. Let me check this out. I already saw this one. I guess. Okay, so page 9. All right, page 9. Let's see. All right, this is the plan for 53 that we saw. And let's go page 10. Okay. Okay, let's see. All right, page 11. All right, so this is about the same plan. The only difference is that it has dental. You don't have to purchase dental right away. You can purchase dental afterwards. But if this person wants to have this plan with dental, so it's going to be $20 more per month, she will get the same plan. Just plus dental and vision, I'm sorry. So I'm just gonna go and look at this one here, complete uh, gold HMO 1450, which is still a good deductible for both health and medication, as you can see here. So let's look at the details of this one. So after we meet 1450, oh, look at this. So primary coverage is only $15 instead of 35, specialist 35 instead of 55. So we're saving money here. And on medication, look, so earlier we saw or 45 to 50% co-insurance on medication. Just God forbid, if something happens and she needs to take medication. For her, this one has a better co-insurance. After the first 1450 is satisfied, then she only pays 25%. That's a saving of 75% on medication, which is not too bad at all. Now, what I like most about this plan, as I mentioned, is 20% co-insurance on everything else. So x-rays, imaging, hospital access, emergency room. We are spending only for 1450 first and then 20%. So if her bill is 1,000, she's gonna pay 200 instead of 1,000. That's a huge saving of $800. So basically, this is how I would shop for a lady like this one. And right now we're set at 477. So if she can afford this plan and she would like to have a marketplace plan, this is what I would recommend. But just so that she knows her options in the private market since she is healthy. And this is the difference between marketplace plans and private plans. So here, the marketplace plan have to accept her. These plans are guaranteed issue, they call them, which means they have to accept her even if she has pre-existing conditions. So for people who have pre-existing conditions, this is going to be their only option. But if this person, as she told me, she does not take medication, she does not smoke, she's not pregnant, she's not planning to get pregnant. Now, the private market, she is an ideal candidate for private market because the private market, what they do, they will run her medical report, and if they accept her, if they decide that she's not a high risk, then they will give her a private plan. They will put her in a smaller group because in the marketplace plan you're put in a high risk group. Everybody is covered, even people who have diabetes, heart attacks, and all that, major illnesses. You're basically grouped with all of these people, and that's why the premiums in the marketplace are very high this year specifically. My clients plans like jumped between $200 to $300 a month. So this is why the marketplace plans are expensive, especially for people who are healthy. So because the higher the risk, the more the premium. So in the private market, what they do, they put these healthy folks in a separate group, and that's how they can afford to give them lower rates on their healthcare plan. Why? Because they know that they are not going to be spending a lot of money on them. On average, they're not going to cost them too much money to cover them. So we're going to be just remember this is an ideal plan for this lady in the marketplace, 477 because she's making $50,000. Now, let's go quickly and quote her in the private market. So in the private markets, I'm going to enter her information here, as you see, 38-year-old female, and I'm going to build a customized plan for her, which she can have an input in, for example. So I'm going to show you exactly what I do here, and I'm going to go with I'm going to go with the most affordable option, and then we're going to see if this lady would like to go with that or if she would like to customize this plan to cover her a little bit more. So my ideal formula is to go to here and select uh, the basic, which is, as you can see here on the screen, there are 3 levels. So we can have a coverage of $250,000 a year, 500,000 or a million. Because this lady is healthy and she has no issues, she does not go to the doctor very often and everything like that, 250,000 is not too bad. She will be fine under this one. Now, for a deductible, this deductible is only be for if she stays in a hospital. So unless she stays in a hospital, God forbid, she will not have to pay a deductible in this plan. And for that, I intentionally choose the $5,000 deductible because that's what gives me the best premium. Okay. So if I choose, for example, a 500, then we will have to pay, as you can see here on the screen, from 136, it jumps to 214. This is just the basic plan. We're gonna need to add accidental coverage and critical illness and and specified illness to it. But this is the base. So that's the reason why when I choose $5,000 deductible, I am saving them a lot of money here. And but if they would like to have a stronger plan, they can do that, and then we can look at the prices and compare them to the marketplace plan, which is $477 so far. So I'm gonna select this one here. We're gonna add some accidental coverage to it, and we're gonna add critical illness, and we're going to add specified disease. So this is what makes a complete plan that will um, be good for any situation, whether it is just like medical visits, doctor visits, or specialist visit, or God forbid, injuries and stuff like that, and illnesses as well. So this is what makes a good plan in the private market. As you can see here, the basic plan is at $216. So that's a difference of $230 savings if she were to be accepted in the private market. As I said, these are not guaranteed issue. These are not like the marketplace plans. These companies does not have to cover you if they decided that you're a high risk. But if you're a low risk like this lady, you could be saving $200 to $300 on your monthly premium compared to the marketplace. So this is how I do it, guys. If you would like me to run your options both in the marketplace and private options, feel free to go to number one bettercare.com. That's, as you can see on the screen, onebettercare.com/demo, and I'll be more than happy to either do this live with you on the phone, or as you watch the screen, or I can just shoot a quick video here for you and send it over to you for you to look at your options, and then when you decide which one is yours that you prefer, then you just give me a call and I'll be more than happy to help you submit an application. If you do this before December 15, then your plan should start on January 1st. When we're talking about the marketplace, of course. But if you do it after December 15, then your plan is going to start on February 1st. Now, if you choose to go with the private option, you don't have to wait until January 1st to be covered. You can apply for this plan anytime, and then it's just going to take 2 to 3 days, maximum a week, for them to decide if they want to offer you this plan or not. And if they do, then you could get your plan as soon as 3 to 5 business days. You can start it, let's say, if you want to start it on December 1st or something like that, you can do that. So it's not like the marketplace plan. So this is it for this video. Feel free to share this video and give it a like if you find value in it. Please share it with people who are looking for health insurance so that they can benefit as well. And I will see you in the next one.